A tech company just posted the single most profitable quarter in its entire history. And 2 days later, $60 billion of its own stock value evaporated in 48 hours. That is not a typo. That happened this week, and it is connected to almost everything else in this video, including why a leather jacket sold for nearly $1 million, why Steam just had its biggest sale ever, and why the stick of RAM in your PC might now cost more than the graphics card sitting next to it. 3 stories, one thread running underneath all of them, and by the end of this, you will understand exactly why the same week that broke sales records also broke a stock market. Let's start with the jacket, because it is the strangest story of the 3 and it sets up everything that follows. On July 17th, Sotheby's auctioned off a signed Tom Ford leather jacket that belonged to NVIDIA CEO Jensen Huang. The pre-auction estimate was between $40,000 and $60,000. It sold for $960,000, 16 to 24 times what anyone expected. 45 different bidders fought over it across 65 bids before somebody walked away with it. We do not know who won. That person has not been identified publicly. What we do know is that Huang wore this specific jacket back in October 2023 at a Foxconn event in Taipei. And every dollar from the sale is going to a nonprofit called the Edge Institute, which funds scholarships and fellowships for students going into engineering and tech. Now here is where it gets interesting, because a jacket selling for near $1 million naturally invites some commentary. And Scott Keeney, who goes by DJ Ski in collectible circles and founded a company called The Realist, made a comment on Yahoo Finance that stuck with a lot of people watching this story. He compared it to how Declaration of Independence documents and dinosaur bones have become the same kind of speculative asset class, essentially arguing that anything culturally significant enough gets treated like a stock now. Whether you buy that framing or not, the number speaks for itself. And people online were quick to point out the irony too. At current retail prices, that jacket is worth about 10 RTX 5090 graphics cards, in an era where actually finding an RTX 5090 in stock is its own achievement. But NVIDIA wasn't done being unusual this month. On top of the jacket auction, the company also announced something called GeForce Trading Cards, Series 1. And no, these are not scam collectibles you have to buy, they are free. NVIDIA is giving these away through what it's calling its Summer of RTX giveaways on social media, plus handing them out in person at events like Bilibili World, QuakeCon, and Gamescom, all happening across 2026. The set includes 14 different cards, and the theme is pure nostalgia. We're talking about cards featuring the NV1 from 1995, the original GeForce 256 from 1999, the GeForce 3 from 2001, the GeForce 7800 GTX from 2005, all the way up through the GTX 1080 from 2016. There's even one dedicated to the old Medusa tech demo. This is NVIDIA looking backward at its own history rather than forward at AI, which a lot of tech writers actually pointed out felt refreshing. One outlet's exact words were basically more of this, less AI, please. Here's the thing, though, and this is where I want you to sit with an idea for a second before we move to the next story. NVIDIA handing out free nostalgia cards while auctioning a jacket for charity is a company that is, frankly, drowning in cash and having fun with it. Keep that image in your head, because in a few minutes we're going to look at 2 other companies making historically unprecedented amounts of money this same quarter. And the contrast with what regular consumers are dealing with right now is going to become the real story of this video. Let's shift over to Steam, because the platform just had a run of records that honestly sound made up if you say them out loud. Back in January 2026, Steam hit 42 million and change concurrent users, breaking the previous record of just under 42 million that had been set only a week earlier. Then, in March, it broke its own record again, this time crossing 42.3 million concurrent users, according to SteamDB, with Steam's own official statistics putting it at a very similar 42.2 million. Sunday, as it turns out, remains the platform's busiest day of the week, both for people logged in and for people actually in-game rather than just idling on the storefront. Then came the summer sale, which ran from June 25th through July 9th. Analyst estimates, and I want to be clear, these are third-party projections since Valve is privately held and does not release official financial figures, put the gross merchandise value for this sale somewhere between $900 million and $1 billion. For context, the 2024 summer sale generated $876 million, so even the conservative end of this year's estimate represents real growth. One research firm, Alinea Analytics, built their projections off observable pricing and sales patterns, rather than confirmed numbers from Valve directly, and they estimated Steam pulled in $11.1 billion in just the first half of 2026 alone, up 14.5% year over year. To put the scale of Steam in perspective, the platform now controls somewhere around 74 to 75% of the entire PC digital distribution market in the United States, with Epic Games Store sitting a distant second at around 8 to 10%. What's driving all this growth is actually pretty interesting once you dig into it. Nearly 80% of that first half revenue came from back catalog titles, meaning games that were not even released this year. Only about 21% of Steam's revenue in the first half of 2026 came from brand new 2026 releases. That tells you something important about how people actually use Steam now. It is less about chasing the newest release and more about a massive deep library that keeps generating sales year after year through sales events, discounts, and word of mouth on older titles. Analysts pointed to a few specific factors behind the surge too. A wave of new Chinese players joining the platform, viral co-op games pulling in friend groups who then buy their own copies, and smarter algorithmic discounting on older titles that keeps bringing lapsed buyers back in. Now, PUBG Battlegrounds still holds the all-time single-game concurrent player record at just over 3.25 million, and that record was set back in January 2018. 7 years later, nobody has beaten it, even as Steam's overall platform numbers have more than doubled. That's actually a fascinating detail, because it means Steam's growth is not being driven by one runaway blockbuster. It is being driven by breadth, millions of people spread across tens of thousands of games, rather than everyone piling into the same title. Counter-Strike 2 remains the most consistently played game day to day, routinely topping the live concurrent charts even without ever touching that all-time record. So that's two stories of pure winning. NVIDIA giving away nostalgia and auctioning charity jackets, Steam breaking sales records for the third time in a single year. Now we get to the part of this video where the mood shifts, because the third story is the one actually affecting your wallet right now if you're planning to build or upgrade a PC, and it connects directly back to that stock market crash I mentioned at the very start. Memory, RAM, and storage. This has become, without exaggeration, one of the strangest stories in the entire tech industry this year. Here's the short version of how we got here. AI data centers need an enormous amount of high bandwidth memory called HBM to feed all the GPUs running inside them. According to a Micron executive, producing HBM consumes roughly 3 times the wafer capacity of standard DRAM per gigabyte. So when Samsung, SK Hynix, and Micron, the 3 companies that together control somewhere between 90 and 95% of global DRAM production, started shifting their factories to prioritize HBM for AI customers. That left dramatically less capacity for the regular DDR4 and DDR5 memory that goes into your gaming PC, your laptop, and pretty much every consumer device you own. The price numbers here are genuinely hard to believe. Samsung raised prices on 32 gigabyte DDR5 modules from $149 to $239, about a 60% jump in a single move. Contract pricing for DDR5 more than doubled, going from around $7 per unit to $19.50. Market research firm TrendForce projected conventional DRAM contract prices would rise 55 to 60% in the first quarter of 2026 alone, with server-grade DRAM climbing more than 60% on its own. Then, in the second quarter, TrendForce's projections called for DRAM to rise another 58 to 63%, and NAND flash, the memory used in SSDs, to rise 70 to 75%. According to Counterpoint Research, global memory prices overall rose 80 to 90% quarter over quarter in the first quarter of 2026, which they described as reaching historic highs across every category they track. And it's not just PCs. Automotive-grade memory chips, the kind that go into modern cars, rose roughly 180% over just 3 months according to industry reporting, which TrendForce estimated could add 7,000 to 10,000 yuan to the cost of manufacturing a single vehicle in China. Smartphone manufacturers have started adjusting production plans because of it too, with TrendForce projecting smartphone shipments could decline 16% in 2026, purely because memory has become such a significant cost. Here's the part where this connects back to that opening story about the leather jacket, because while all of this pain has been happening to consumers, the 3 companies making that memory have been posting numbers that do not look real. Samsung's semiconductor division reported an operating profit of 89.5 trillion won for the quarter ending in June. That's roughly $58.5 billion, an increase of 1,814% compared to the same quarter a year earlier. SK Hynix reported operating profit of 60.54 trillion won, about $41 billion, up 557% year over year, with an operating margin of 76%, which SK Hynix President Song Hyun-jong's own team described as an all-time record for any memory chip maker in history. But here's the twist nobody expected. Even with numbers that huge, SK Hynix actually missed analyst expectations, and its stock dropped 9.6% on the news. Samsung's mobile division, the one that makes Galaxy phones, actually swung to its first ever operating loss, because the same memory shortage driving chip profits through the roof is now making it more expensive for Samsung's own phone division to source the parts it needs. 2 days after these earnings came out, South Korea's Kospi stock index had 2 brutal trading sessions back to back, down almost 11% on July 28th and another 6% on July 29th, wiping out roughly $271 billion combined from Samsung and SK Hynix's market value. Investors, it turns out, are worried that if AI infrastructure spending slows down even slightly, this entire memory boom could reverse just as fast as it appeared. So where does this actually go from here? SK Group Chairman Chae Tae-won said at Computex in June that he expects this memory bottleneck to continue until 2030, and the company is planning to double its wafer production capacity over the next 5 years just to try to catch up. Micron has said new fab capacity in places like its Idaho facility won't reach full volume production until 2027 at the earliest. That means, realistically, if you're waiting for memory prices to come back down to where they were in 2024, most analysts are not expecting meaningful relief until sometime in 2027 or 2028, and some are even less optimistic than that. So here's what actually connects all 3 of these stories. NVIDIA giving away trading cards and auctioning a charity jacket for charity, Steam pulling in record-breaking sales, and memory manufacturers posting the most profitable quarters in their corporate history, while their own stocks got hammered by investors nervous about how sustainable any of it is. This is what an industry looks like when demand for AI infrastructure is reshaping every single layer underneath it, from the chips inside a data center all the way down to whether you can afford to upgrade your own PC this year. The people at the very top of this chain are experiencing the best financial quarter of their careers, and the people building PCs at home are experiencing the worst memory prices in over a decade. And remarkably, both of those things are true at exactly the same moment for exactly the same reason. If you found this rundown useful, the like button genuinely helps this channel more than you'd think, and subscribing means you won't miss the next update. Because if SK Hynix's chairman is right about this bottleneck lasting until 2030, this is not a story that ends anytime soon.